Hello dear crypto friends, and welcome to this new video on this interesting day in the crypto market. Why is it so interesting? Well, because the candle close of this week, this weekly candle close will be very important and will eventually decide if we continue pumping in this market or if we are entering a bear market. So it is a very important day. It is very important how this weekly candle will close. So let us try to understand what is happening in this market. As always, we have our long-term weekly Bitcoin chart that is always the starting point for all our analyses. And I have loaded quite a few indicators. I have loaded the weekly moving average 200 in blue, then the weekly moving average 290 in green, then the volume bars here and the RSI, the relative strength index. So these are most of the indicators I often use for long-term considerations. And let us first start with the volume. We can see that the weekly volume is looking really excellent now. We have now Sunday, so the weekly candle close is not so far away anymore, but we see that the volume is quite nice. It is almost as high as in these last instances where we had really high volume, not quite as high, but already not too bad either. So the question we would of course now like to know is, was this the bottom or not? And if it was the bottom, what will happen afterwards? Well, we said that the volume looks nice, so this could have already been the bottom if we just look at the volume, right? But of course, that is not a strong indicator for a market reversal, because there could be another one. You know, we could just have a next weekly candle and then we go down lower and we have even higher volume. So that is not a guarantee yet that we really have a reversal. If we go back to the low of March 2020, we see that the low was actually pretty ugly. I've said this quite a few times, and in hindsight, everyone is saying like, oh, this was so obvious. It was such a really good buying opportunity. But I still remember quite vividly how it actually was absolutely not sure if we now would not creep sideways and then drop a second time and go even lower. Okay, this was absolutely not sure. Now in hindsight, of course, it seems super obvious. But back then there was so much uncertainty in the market, and I still remember that I didn't like this candle close here. If we look at this weekly candle close, it is actually pretty ugly. The weekly candle close below the halfway point, and then we just weirdly creeped upwards for like 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12 weeks until we got to this resistance line here, right? Now this weekly candle actually already looks a lot better because we are now sitting at around 30,000. So this is already above the halfway point. If we close now like this is actually a more beautiful candle close than the one in March 2020. And it looks as if we will do so. Of course, there's still a bit of time until the weekly candle closes. Here in Germany, it closes at 2 a.m. Monday morning. So there's still like 7 or 8 hours until this happens. But it's looking already pretty good. And if we don't go too much lower, then the chances are not so bad that this has already been the bottom. If we now go to the 4-hour chart, we can see that the 4-hour chart is kind of preparing for a bullish move. It is already looking as if it wants to break out, because we see we do have a bullish divergence, right? We have lower peaks in the price and higher highs in the RSI. So this is quite a nice bullish divergence. I would say the chances are better that we now recover and go back here to these values where the dump started in the course of the next 1 to 2 weeks. Now going to the weekly, the Bollinger Band also doesn't look too bad. It has been broken to the downside, but this was very similar to what happened in March 2020, right? Very similar. Now the weekly RSI will be interesting. The weekly RSI, when we close at night today, it will be interesting if the weekly RSI will actually go below the March 2020 low. I think this could actually happen. If I go one to the side, and with this current inclination, we could actually be at 32 when the weekly candle closes, and in March 2020 we were at 33. So we could have a weekly RSI close below the March 2020 low, which would be quite low, because only twice in the history of Bitcoin, in the whole history of Bitcoin, has the RSI been lower. Once in January 2015 and once in December 2018. So the chances are pretty good that this could have already been the bottom. But the monthly chart, on the other hand, speaks a bit of a different picture. The monthly RSI, if we look at this, would indicate that we have not yet seen the low, because it seems to have such kind of a cyclical structure. But as we know, friends, cyclical structures work until they suddenly don't. So I would not put too much emphasis on those cyclical structures just because it looks beautiful, right? And it has happened twice. It doesn't mean that it will happen a third time. This is exactly like saying, oh, the Bitcoin 4-year cycle. It has happened last time, so it will happen every time now. We saw that this was not the case. The Bitcoin 4-year cycle did not work this time. Bitcoin has changed its behavior. So we shouldn't assume that only because the monthly RSI has this cyclical pattern that we will continue lower and that in February 2023 we will have the real low. We shouldn't assume this. It could be, but I don't see any reason why this year must continue the way it did. Now, I have said the last time that if we now close in a nice way, right? If we close this weekly candle above the halfway point, the higher we close at night, the better. If we close at 31,000 and above, this would be insanely nice. The higher we close, the higher the probability that this was a shakeout, that then we recover, we dip again, and then we could indeed still go to higher prices, and this bull market could still be intact, even though many don't believe it anymore. But that is for me all the more a reason to believe it, because if too many people believe one thing, I normally tend to believe the opposite. So that is, I'm a bit of a contrarian person in this market. I have witnessed that if too many people are certain that something will happen, for example, too many people are absolutely 100% certain that the 4-year cycle is a given, or that it was 100% clear that by the end of 2021 we would go to over 100k because 4-year cycle, because Plan B's stock to flow model said it. If too many people believe something, normally it doesn't happen. Normally the opposite happens. And now everyone is super bearish. Everyone is like, oh God, we are in a bear market. Oh, it's going lower. It's going much lower. We are going to the weekly MA 200 and 290. So at least 21,600. Or if we are unlucky, to 16,500. I have even heard numbers like 13,000 or 9,000, based on the assumption that the last time we had a correction that was 83%. So of course now we need to repeat the exact same thing, right? We need to do the exact same thing, and then we go down to 11,500. But friends, this is not how this works. This is not like, oh, this has happened once exactly like this, so therefore it must happen again like this. Believe me, I also made the mistake of believing that, but what Bitcoin does, it always does the opposite of what most people think that it will do. If most people think now that it will go much lower, then it will not go much lower. If most people think that we are going to 300,000, then we will not go to 300,000. The same way that even I, seriously, that even I made the mistake to think that, oh man, this is amazing. We are going straight to the upper line of this trend channel here. We are going straight to 110k, right? Even I was thinking that. But no, it was wrong, because the sentiment here was so extremely ultra bullish that I should have known that too many people are super euphoric and that we are reaching the top. And the exact opposite is happening now. We are going down here, so people naturally say we are going down much lower. The same way that everyone was thinking that here we are going much higher. So I'm starting to think that this could have already been the bottom, but of course I would like to have confirmation that we are closing quite nicely above the halfway point. But as we see from the March low 2020, even if that is not the case, even if it closes below the halfway point, we still can get a recovery. But if we close nice and strong, if we close above 30,000, the chances are good that we are doing such a thing here, and then we are continuing this bull market, because believe it or not, but this whole thing could just be a stretched out bull market, because people always think in terms of bull and bear markets. But you see that after these cycles here, where we had quite defined bull and bear market, bull and bear market, bull and bear market, now it's a bit different, right? It started actually already here. I would say in 2018 it started changing its behavior, because instead of like a huge bear market, what was this here? I mean, this did not really fit a bear market type of behavior, in my opinion. Okay, bear market should have been something like this here, and we are wobbling around somewhere down here, and then we start the next move. This would have been a normal bear market as it had happened in 2014 and 2015, right? Here it was like this. This was a long protracted bear market. And even in 2011 we had something like that. Although in 2011 it did already also make such a weird bounce, so it was a bit more like we have it now, right? It made such a weird bounce and then it continued going to the upside. But in 2014-15 we had this bear market, so everyone was assuming, oh, we are now again doing the exact same thing, and then bam, out of nowhere this thing comes along and goes almost to the all-time high. Not quite, but 14,000, that is not so far away. Of course, in hindsight we do know that this was a fib level, an important fib level. This was the 0.618 Fibonacci retracement level that has been hit, and then what a surprise, we go on into the rally and it hits the 3.618 Fibonacci extension, right? But this shakeout has already been quite nice, quite comparable to this one, as we said, and quite comparable to the Silk Road crash here, quite comparable to these ones here. So the volume was not bad. We always had shakeouts in bull markets along the way. And if we actually compare this whole thing here, right, this whole thing to this structure, so let us go back to the 4-hour chart all the way back to 2017. Yes, we go back all the way to 2017, and let us copy this thing here, right? Let us copy this thing, because it looks strangely familiar, friends. It looks strangely familiar. So let us overlay this. Yeah, we like playing around with fractals. Many people like fractals. I also am a fan of fractals. They are like Elliott waves and like RSI and other indicators. They are a useful tool, friends, but please don't make the mistake to think that just because something happened like this in the past, that it will repeat exactly the same. I see many crypto YouTubers relying a lot on fractals and overlaying fractals, that something that happened like a few years ago or happened back then, and then therefore we are doing the same thing and therefore it must repeat exactly the same. But that is unfortunately not how the market works. Fractals are nice, they work nicely sometimes until they don't. And they always stop working at some point, right? So the fractal I was talking about now is this one from 2017. Look at this here. So I'm overlaying it here with this structure, and we do see a very familiar picture. Like, what is happening? Look at this. This is quite amazing that it fits so well. The whole thing here, even the crash, even the low here, March 2020, the rebound, then the rally, the first peak here, right? Then the second one, like even with the shoulders, one shoulder, head, second shoulder. It's crazy. And then we go down. Okay, the crash here was a bit more aggressive, I have to say, but we go down at a similar time, then we rebound and we continue upwards to higher prices. So this fractal from 2017 certainly is interesting and certainly could indicate that we might rebound now, right? We might bounce now, because we didn't go obviously so low. And as I said, if the weekly candle closes nicely today at night, then we might get a bounce and then continue our way upward. Another theory that speaks for that we are actually still in a bull market is the theory that after this bull market here of 2017, a new Elliott wave started, and that we are actually now in 1, 2, 3, 4, 5. That this whole thing here was not a bear market, but a prolonged wave 4 in this 5-wave move up here. Wave 1, wave 2, wave 3, wave 4, wave 5. And if we go into Elliott wave theory a bit, wave 4s are always quite protracted and they feel to many people like bear markets. Let us read it up if you don't believe me. Wave 4, Elliott waves, right? Wave 4 is typically clearly corrective. Prices may meander sideways for an extended period, and wave 4 typically retraces less than 38.2% of wave 3. So did it retrace less than 38.2% of wave 3? That is now an interesting question. Wave 3 we know is the strongest, the biggest wave in the Elliott wave theory. So the wave 3 is the biggest one. So let us take the fib levels of this entire move here from 69,000 to the low of March 2020 at 3,900. And this would actually be our whole wave 3, right? And what do we see, friends? What do we see? Wow! We hit the 0.382 Fibonacci support level. If we close above, if the weekly closes above, we are in the green territory and we technically could still be in a bull market without actually knowing it, because the retracement went as low as permitted, as we have seen here by the Elliott wave principle. So if we are diehard Elliott wave fans now suddenly, then we do see that it is still possible. If we now close at around 30,000 tonight, we are actually still in the green zone and we could still technically continue, and this could still have just been a wave 4 correction in a larger trend in a bull market that has actually started. Yes, that has actually started in early 2019, because now the cycles have already become so long that we do not recognize them anymore as cycles. They have been protracted to such an amount that the corrections are now so long. What used to be only like 1 week a few years ago is now a few months. They have been protracted so much that the corrections that, as you have seen in this overlay, were quite short in 2017, now are protracted for quite a few months. That is actually how long the cycles have become, and we could actually be in a giant bull market since early 2019. This whole thing here could have been one gigantic bull market, but of course we don't realize it because it does so many weird corrections and bizarre things in between. So that is the current theory which I have. Of course, please be aware that I could be wrong. I'm just putting out this theory. Why do I put it out? Because everyone believes now that we are in a bear market and the sentiment is super bearish. Everyone is super pessimistic. So I'm just thinking, what are most people thinking? And I would just think the opposite. So that is my strategy or my line of thinking. Of course, I could still be wrong and then suddenly all the other people are right and we are really in a bear market. This of course could happen, especially if the dollar index, upon which we have seen Bitcoin's behavior, strongly depends, especially of course if the dollar index just continues pumping like a crazy maniac. Then friends, then of course we can kiss this scenario goodbye. But if the dollar index now at some point in the not too distant future starts correcting strongly, and many things are pointing towards this, for example, it is super overbought and overextended and hasn't corrected in quite a while. If that was to happen, then of course our scenario that this here was a wave 4 corrective structure, an expanded flat wave 4 corrective structure in a bigger 5-wave Elliott move, and that wave 5 will now begin and we are going to 150 or 160 or something like that thousand by the end of the year. It could still happen. Of course, this will be invalidated if the candle closes bad and we just dump around here and go to such low prices. Then it's invalidated. Then I think the earliest date for a rally will be at some point in 2023 or in early 2024, at the latest with the next Bitcoin halving. This is my theory, friends. I don't know, will it be true or not? You never know with coins, right? With crypto market, it's the beautiful thing. You never know. Only in hindsight, everything has been so super obvious. Oh, that was so obvious. Ooh, that was so obvious that we should have bought here, right? Wow, this was so obvious. No, I remember it was really not obvious because the candle close, as I said, was ugly and many thought that this would happen. So every time we apply hindsight, so therefore I am pretty curious what will happen, but we should certainly keep a strong eye on the weekly candle close tonight, and I will make an update video tomorrow after the candle close. We will certainly know more, but the chances for a continued bull market are not so low. So thanks friends for watching. Please like this video if you found the information useful, and maybe even consider subscribing to this small, illustrious but growing channel in these dark times here, in this brutal correction or bear market, or call it whatever you will. I am not giving up. I am making almost daily videos now to try to shed a light into this crazy market, and hopefully we can navigate this insane market together. Thanks friends, and see you in the next video. Bye!